Kevin, we are at the end of Q3 earnings, and it feels so good.
We made it through.
We made it through.
Three weeks now of some ups, but mostly a lot of downs.
Yeah, it was really a journey, and there were a few themes that stuck out. I thought we could maybe kind of go a couple segments by segments and then talk about some of those broader themes. But I think a good place to start might be on the downward side of the trajectory with the payers.
Let's do it.
So Medicare Advantage, I think, was the most interesting this quarter, as opposed to other quarters. I think some of that is because open enrollment's about to start, but the the basic everyone is kind of singing from the same hymn book, which is stability and being very thoughtful about where they're in the market and saying like you basically trying to not scare their investors that they're gonna, grab a bunch of unprofitable market share next year.
Yeah, I mean, on the heels of an industry that has had kind of what, 3 years straight of player grabbing market share, profitability really suffering, some big macro headwinds between V28 and stars and whatnot. It makes sense to me that the general narrative from these companies on earnings was, hey, we are focused on stability. We want to grow profitably here. We want to do that thoughtfully. We got over our skis. There was some conversation around plan design and whatnot, and needing to move away from that unprofitable plan design. Largely, like United talked a lot about PPOs and moving away from those. Um, I think that's a very reasonable, natural evolution. I think on the bright side, most companies in the MA space said, hey, we've got our arms around trend now at this point, right? Like it's no longer a huge surprise. It's elevated, that's persisted, but um it's now what we expect. So that felt like progress, right?
Yeah, getting your arms around trend is like, as we go into open enrollment is important. I feel like the sort of outliers of this story were our friends over at Clover and Humana.
Yep.
And they're outliers in different ways. And I think it's plausible to see their stories playing out differently. Clover said, we're going to grow a ton. I think they said 30% this year or 30% year over year, which is a lot, especially when everyone's retreating from the market.
Yep.
And they use that language retreat quite a bit, which I thought was interesting. They're saying people are retreating and we're going to go in and grab market share with our PPO plan. United's terming their PPO plans. We're going to move in and grab those members. And that doesn't seem intuitively to me like a profitable strategy because United, who's very good at the Medicare Advantage game, was losing money on those members. But it will be sort of interesting to see how that plays out.
Yeah, it's like, I mean, for people listening along and watching the space, to me, it's one of the more interesting narratives and one that I am skeptical of just because it flies in the face of the core tenets of managed care, right? Like managing care is about figuring out how to curate a network of docs that you give access to, that you help coordinate benefits and manage the cost of care in so doing. And like that's an HMO, right? You have a gated model where you can help refer people to the right way, and you need them to go to the PCP who's in network, who they're assigned to get access to care, versus these open access PPO products where you as the individual can pick and choose whatever you want to do. And now there's like consumerism elements to that you might want that plan design, but from a cost and management perspective, like I think if Clover can figure out how to do it, good for them. But it just from a theoretical perspective doesn't hold much water for me that you should be able to do it, you know?
Yeah. I think that the two things that I'm kind of watching for Clover going into Q4 and then next year are number one, their HEDIS scores were pretty good this year. They were the best PPO plan, which isn't saying so much because there's not a lot of PPO in MA, but there was at least more last year than there was this year or
Yep.
will be next year. So they were the best from that in that quality in that set of quality metrics. And I do buy the argument that a tech solution like the Clover Assistant could help you with something like quality metrics. That's something that makes sense to me. And so, more so than whether they can grow profitably 30% year over year, taking in a bunch of new PBO plans, like I think no, I don't think that that will be the case, but I will be looking to see if they are able to continue the like strong quality performance because that's another area that again, intuitively, it feels like they should be able to with a technology solution. Their star scores didn't reflect it for some other reasons, but on the medical quality scores, they were strong, and that would be, I think, a good indicator that at least the Clover Assistant is working well or as expected.
Yeah, I buy that. I mean, that makes sense to me. What are you watching for Humana?
Well, Humana is also they're a little bit less loud about it. You and I were joking that their earnings call, they were doing everything that they could to guide the market towards a good growth year for them without
Mhm.
scaring their investors. And so they were very quick to reassure everyone, no, 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 it's the good kind of growth.
Mhm.
We're not like Clover just going out and hoovering up any members that we can find from other plans. Like we're growing well and responsibly and disciplined. It does seem like they are coming in hot though.
Yeah, I mean, they said as much, right? Like, key takeaway for me from that call was they are the one plan who is saying, "Hey, we actually think the market's going to grow just like it did last year, mid-single digits." When everybody else is like, CMS is saying it's flat. The plans in their filings to CMS suggest it's slightly down. So, like, Humana thinks it's growing faster than others, and on top of that, they're saying they're growing at high end of their expectations. So like if they think the market's growing at mid-single digits, their expectations I would think are higher than that. If they're at mid 5 millions going into open enrollment, that means they're growing what, 10%, like 500,000 lives. Like they're I think going to take a lot of new members from the industry. And I think the big question will be how many people are leaving Medicare Advantage? Like, is Humana right that the market's going to grow 5%? And if so, are they taking that share by holding benefits consistent, which they were talking about? And it'll be interesting to watch. I mean, clearly the market fell what, 8, 9% that day. Like, there's some skepticism there that Humana is actually going to be able to manage it profitably. And I think that's going to be a really big question to watch in 2026 for folks is it seems like either Humana is going to look like total geniuses who timed this market better than anybody, and grabbed membership ahead of better years in 2027, 2028, and they're prepared for that. Or they're going to have a really, really challenging profitability year. Like CVS, when they went through this new leadership halfway through the year, like changing everything, right? I mean, it feels like it's one or the other with not much room for in between. And it'll be interesting to watch. I could see either argument playing out for what's going to happen, you know.
Yeah. I think that the two unknowns for Humana right now are is trend going to be is the market right about trend or not? Because if the
Mhm.
market's right about trend, they seem like pretty confident that they've priced correctly. If the market is wrong about trend, like they were this year, then it's going to be a sort of no matter what happens, it's going to be a painful year for all of the pairs, but especially the people who grew a lot. The other thing is Humana's coming off a couple of rough star years, and they're talking a lot about their stars remediation. At the same time, everyone else is not everyone else, but alignment is doing really well in stars. Like stars is a zero sum game. Like it's not like we can all like you're graded on a curve,
Mhm.
and so it is not just enough to say like we're remediating our stars program. You need to actually go out and be better than meaningfully better in your markets than the other players. And so that's the other thing I think to as we go into Q4, how much um, yeah, how much sort of like a level of confidence do we develop in their stars remediation? Because that's going to be also critical if they have a big growth year.
And as I have a hunch will happen, given what I've been like reading and seeing out of DC, thanks to reading more DC stuff through you, is it like it seems like there's going to be some big changes to stars in the coming, I don't know, months, I suppose. That'll make it even more interesting, I think, to keep an eye on.
Yeah. So we'll be watching that, and we'll get to sort of when DC makes those announcements, we'll get to take part in the time-honored tradition of everyone trying to work the refs on Stars stuff, which is yeah, not my favorite game to watch because I'm like, you gotta play the game. You can't be
Yeah.
complaining about it all the time.
Yep.
Let's bump over to the other large government program, Medicaid. So this was a rough year for Medicaid,
Hmm.
and there was the trend, which I think is, kind of a story across all payers at this point, regardless of population. The other piece of it, though, is they were dealing with the redeterminations, and they're kind of the redeterminations are finally running off. That caused an acuity shift, which impacted their trend a little bit more acutely. And United was like, we are not going to break even this year,
Hmm.
and we're not going to break even worse next year.
Yeah.
And so it's a rebuilding year for the Medicaid businesses.
Yeah. Both they and Elevance said 2026 is the trough year, right? Like it's going to
Yeah,
be the lowest profitability before 2027 starts to recover, which makes sense. Molina didn't describe it that way, right? But they like I don't get the impression that they're doing that much better necessarily. It's just they kind of view it as a little bit more progression. Is that your
yeah,
interpretation too?
yeah.
Yeah.
Molina is also sort of interesting. It does feel like the story that you can tell as a payer. There's some part of it which is like, well, the whole industry was wrong about trend. We should fire our actuaries and get better ones in the future. But like we just got caught off sides. And then
Mhm.
there's also the sort of day-to-day operations of running a plan. And both of those things matter. But if you're wrong about the first one, the second stuff matters a lot less.
Yep.
Molina is sort of famously a good operator. And so even though they, had to keep cutting their earnings per share, three times
Yeah.
this year, and almost three times in the back half of the year, they revised.
A lot of
But
that due to ACA, right?
yeah,
Yeah.
which we'll talk about in a second. But Molina's like, we are seeing a ton of opportunity in our M&A pipeline, and we're going because we're good at operating and we have cash, we can go in, get these books of business at a good deal, and then bring them up to profitability. And it's a story that makes a lot of sense.
Yep, we've talked a lot about more generally the challenges of regional health plans. And like if you take what United and Elevance said about 2026 being the worst year for profitability, and then you step back and you think to yourself, okay, we're already hearing about these plans in Oregon with Care Oregon having financial issues out in Boston, Massachusetts area, plan with issues. In Minnesota, we've got plans with issues. Okay, they already have issues. They're going to go through a worse year ahead. I don't think it's too much of a stretch to think, oh, a lot of plans are going to run out of runway financially, look for a home. And I get the thesis that Molina's sitting there saying, okay, 2027 and beyond is actually looking pretty good. We can acquire these businesses for relatively cheap and bring them back to our target margin. And we've done that before and we'll do it again here. Like, I actually think that makes a ton of sense. And is a is a good strategic position to be in. If anything, I'll be curious to see like, do they have competition for any of those assets? And like, what does that bidding process look like? Because it doesn't seem like there's too many natural acquirers of these assets.
No.
So that'll be really really interesting to see.
And I think that dovetails nicely with something you called out in your commentary on the Centene earnings call, which is if you were, thinking about the one big beautiful bill and everything that's going, like all of the changes going on with Medicaid and how it's going to impact state budgets, you might say, well, that's a huge headwind for
Mm.
these payers. But Sarah London in the earnings call shared, just like managed care, helping states navigate smaller, tighter budgets is what we do. And so this is our opportunity. Like this is an opportunity to go. And she shared some stories about the sort of guidance that they're giving to states on how to navigate these things. And so I kind of have to think that you have to like Molina's odds here of being able to take these plans and their experience in doing Medicaid managed care, and in 2027 saying, okay, this is like a profitable year for us.
Yeah, for sure. I thought Centene was also interesting in highlighting how idiosyncratic some of the challenges that these payers can have. So Centene came out and they increased well, they increased expectations for the year on ACA, but in Medicaid, and we'll come to that in a minute, they talked about some of the pressures they're facing, and they talk specifically about how in Florida it's one contract for kids' mental health. And then they had an issue in New York that was a provider that was kind of, it sounded like fraudulently billing for services that the state, like they termed from the network and the state is now pursuing action against. But it's like, they, on a public company earnings call, are talking about one part of a program in Florida driving a huge headwind for the business in the year, and New York, and them fixing those two things. Like they got a retrospective revenue adjustment for Florida, and that caused them to increase guidance for the year, I think, right? Like there are these little idiosyncratic things where, back to your Molina point, you can see the, hey, we're working with this state over here. They've figured out how to administer this pediatric benefit in a better way. Here's how they're doing it. I buy that logic, it should work.
A
So,
hundred percent, 100%. And the challenges from state to state are not that different. I mean, state Medicaid, the state Medicaid departments are all run at the state level and they have their own things going on. But the Colorado like stakeholder update, it was, chapter and verse, the same sort
mm,
of problems that Centene was seeing. And Centene isn't in Colorado, but it's just like that those are the problems. And so if you are able to solve them, you can go and provide a lot of value.
yeah, I buy that.
On the marketplaces, I mean, the government's back open. We still don't know if the enhanced premium tax credits are getting extended, and so that was kind of overhanging all of it, all of those discussions. But I think the sort of the bigger piece of this is it was a rough year for the ACA.
Yes. I mean, going back to Q2 era, the weekly data that came in June, the market morbidity being significantly worse than anybody expected. Um, It was interesting to see in Q3 earnings how differently it seemed to go for some of the companies, right? Like Centene, seemed like they positioned it kind of as it's still hot, but we got our arms around it. The weekly data is no different than we expected. September brought a little bit more utilization than we expected. So we think Q4 is running hot. We're increasing our expectation of medical costs in Q4, but it was very much we got our arms around this. We know, generally speaking, what's going on versus Molina that I don't really know what happened, but they clearly didn't have their arms around it and they missed in a big way. And I don't think had a particularly great explanation for the underlying drivers of what caused that miss, right? Like Centene's earnings call, at least they talked about September. We don't know what it is, but it's also tied to it's the same period of time where we're talking about subsidies, having more conversation about it. That might be getting more people to go get care now. There's at least some plausible conversation about that. Molina, I didn't hear much beyond it was really tough, right?
Yeah. Yeah, it is interesting to hear what the ACA payers, like when those businesses are talking about what's going on in their segment, what they talk about and what they leave out. So one of
Mhm.
the things that Oscar has been very loud about saying is that we have not been negatively impacted by program integrity stuff,
Mhm.
materially negatively impacted. They had some members roll off because of program integrity issues, but they seem to be implying that it's a lot lower than some of the other companies.
Yep.
And so that's, I think, like an interesting detail that's hanging out there. Molina does have the small silver, stable small silver.
Also
Um,
stable.
yeah.
Silver stable.
And it's at least plausible that program integrity could have hit them harder given that.
Yeah, I mean it to unpack that, like the two low-cost silver plans, part of what was happening from a program integrity perspective is if, and Centene talked about this on the Q2 earnings call, right? If one of those plans changed in a market, that prompted the newer, stricter program integrity rules to come into play. And so, like in Q2 earnings, part of this Wakely data, Centene was out there saying in markets where there was a change in those two plans, trend was significantly higher, with the theory, to your point, being that you were losing a lot of these, whether they were people with plans not utilizing because they didn't know or what have you. Um, they left, and so you had higher trend in those markets. So yes, it would make sense that given Molina's theory was small silver stable, they have had a lot of that business in. What I still don't get, even as I say that, is like, why would it show up in Q3 of 2025? Like, I would expect, just like playing through that logic, I think that would then hit in 2026, right? Like that's when Molina would experience that. So it's I don't know. It'll be interesting to watch how the next couple quarters go for Molina in terms of that book of business because
Yeah.
uh it's not it doesn't add up to me.
The theory of the case that you're like, I'm very good at Medicaid and I'm going to do ACA is a logically sound one, but
Yeah,
I kind of don't understand why Molina's sticking with ACA given everything that they have on their plate and after what was a no good, very bad year, and that the tailwind from their strategy is at least slated to unwind, which is these enhanced premium tax credits are, done at the end of the year and they might get renewed, but for a year or two, it just doesn't seem that's like the other larger strategic question. It feels like
yeah,
I don't if I was a Molina investor, I don't know that I would be ecstatic that they're staying in the business.
yeah. I mean, we saw this with Aetna announcing it last year, right? They said, "Hey, we're leaving the exchange market. It's too volatile and not worth it." And I actually think for investors, it's like, okay, great, focus on fixing the core. And, there's a waiting period where you can't get back into the exchanges, but you'll be able to enter them again eventually. As we saw with all the big plan exits back in like 2017 era.
Yeah. Let's move on to the other side of the coin, who the payers are paying, hospitals and provider enablement. You wrote a great report on Privia and then had a chance to talk to their EVP of medical groups. I was wondering if you could kind of give us the high level on Privia this quarter.
Privia continued on the path they've been on for years now, which is solid growth in the independent primary care market, supporting practices and um, managing both fee for service and risk contracts. This quarter, so as you know, Privia has always been known for the phrase, well, maybe not all, but like in recent years, known for the phrase, it's called risk for a reason. They've been thoughtful about not entering global cap contracts in the way that everybody else has in the enablement space. Most others have in the enablement space, I should say. Uh, but this quarter, they were very focused on value-based care conversations, specifically one around their solid performance in MSSP and the results they had there. But then two, they acquired Evolent's ACO business, which they announced back in September. That was $100 million up front in cash, and then a potential earnout of like $13 million based off MSSP experience. Um, so there's a lot of talk around Privia's growth strategy, how it's thinking about those VBC types of contracts and whatnot. And I think it's really interesting to hear earnings calls like that. And like when you think about the payer provider construct, Privia is over here saying, hey, healthcare costs are on the rise in this country. We should be supporting independent primary care just in theory as a central part of a healthcare system. It is a lower cost option than like partnering with the health systems and everything you have to do there. And we're going to help those independent primary care practices make it through. We're going to do that by, as they talked about on the previous, some previous investor calls, change out the engine of the primary care practice and fee for service and allow 10 to 40% more on a per encounter basis, driven by RCM and some of the other things we discussed with them. And allow them to thoughtfully enter VBC contracts when there is an appropriate amount of shared risk between the payer and provider. And to me, like it is, I listen to them tell that narrative, and it's like a no-brainer for where VBC got too over its skis in global cap contracts, where, as they said, as Jason said on the call, it became a uh, heads I win, tails I don't lose proposition for payers. And that's not the theory of shared risk contracts, right? And so I think it was been interesting to watch that. The analyst questions are all kind of forward-facing questions of how's Privia going to grow from here. Um, and I think that's kind of the big question for Privia, you know, are you acquiring assets to grow? Are you entering new markets? Are you going deeper in existing markets? All of the above.
It was a similar, you pointed this out earlier, but it was a similar analyst call in tone to alignment,
Mhm.
which is not poking at, how what's management's doing, but saying is like, how can we grow this thing a little bit faster? Can we
For
let's
sure.
get this show on the road?
It's such an interesting. I tell every person I can that like the earnings calls are the most interesting strategic things you can listen to in the space, and they're all free. Like you can just dial in and
Yeah.
listen. But like if you are managing a healthcare business and you have investors that you are trying to keep happy who have invested in your business, it is fascinating to like when things are going well, the investor questions are not about explain to me the core model. It is about how quickly can you grow this thing and can you keep it going to like the same degree in growing it? And that is alignment and Privia versus the rest of the industry, which is the house is on fire. Are you fixing the house? I don't care about the growth plans. I care about how are you getting stars back to where you want it to be, you know? Please actually don't grow because I am worried about that, you know?
Yeah.
Uh,
To the Humana dancing around, like we're growing in a very thoughtful, sensible
yes,
way. Do not worry about how we're growing. And yeah, it's like no one is asking that question of Privia because Privia, they just want more growth. And so good
right.
for them.
Yeah, for sure. I mean, it is a strategically, it's a really good spot to be, right? Like you get to chart your path forward, and I imagine that's a fun spot to be for that leadership team. So good for
Yeah.
them.
Also on the provider side, hospital operators were reported. I always love listening to the hospital operators report because it's sort of a mirror image and on what's going on with the payers. And so not like the laws of gravity, but if the payers are having a bad time, the hospital operators are probably doing pretty good. That's just where a lot of the spending in the United States happens on healthcare. And yeah, the standout was Universal Health Services, UHS. Their acute revenue per adjusted admission increased almost 10%. The rest of the pack was in the 5 or 6% space, but that's a pretty sizable raise.
10% seems pretty nice.
Yeah. And then there were, each of the hospital operators has kind of a different flavor or strategy. Some of them are really heavy on ambulatory surgery centers. Some of them are, heavier on, they do some psychiatric. But the story was, I think, similar across the board. The volume growth was pretty normal, like low single digits. The revenue per adjusted admission was up mid-single digits to high single digits. And then you had and then you just had some conversations about state-directed payments, which are the payments that a state can use Medicaid money for to kind of help compensate hospitals. And the figures are pretty large. So a newly approved one for DC is a $90 million benefit. And at the UBS call or the UBS conference, they were chatting with I think it was HCA, and they were saying just of their outstanding state-directed payment applications, it would be if they all got approved, it'd be a $700 million tailwind to EBITDA.
It's crazy. You flagged that one for me and I listened into it. So an analyst was doing that math on those couple programs and asked HCA, and HCA of course demurred and didn't didn't give an indication of it, but I mean, usually when analysts are doing that math, like it means they've done the math and they're more often right than not. Yeah, um, it's a lot.
It's a lot. And so those programs are changing, and I think the headline there with the one big beautiful bill, the headline there is that I don't think it's gonna impact the hospitals in a catastrophic way, but I do think that it is a good indicator for what's going on with the non-publicly traded hospitals, specifically the nonprofits, because these hospitals, you basically get it based on your volume of Medicaid. HCA's numbers are really high because they're a really big system. They're
Mhm.
massive. But other hospitals which have higher percentages of Medicaid but uh, smaller overall revenue are going to get hit a lot harder when the state-directed payment program changes. And it's about 30 states where it's going to go down roughly 20% in those states.
So that's going to be a bit, I mean, that seems like a big impact in those.
Yeah.
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 This
There's
was kind
some
of, this was one of the key, the big beautiful bill cuts to Medicaid, right? Like when people talk.
yeah.
Yeah.
Yeah. So there's the biggest single cut is just the reduction in Medicaid members through the work requirements and some of the other stuff. But then almost equal in size is the reduction in provider taxes and state-directed payments, which is saving like 400 billion over 10 years. We had someone on the HTN discussions talking about this, Jonathan Palasak, and he was saying it's like it's roughly 5% of Medicaid spending every year is going to get pulled out of the system. Not trivial,
Yeah. No, that does not seem it.
especially when margins are thin. Um, Otherwise, like the only other thing I'd flag, which is a long-standing trend, is that inpatient surgeries admissions are generally down and outpatient ASC volume is up. And that's the world we live in now.
Yeah. Did you see more of the systems moving to that ASC strategy in your mind? Like I know Tenet's out there in a big way talking about ASC strategy. Was there much? What do you think
Yeah,
from the Q3 earnings calls?
Tenet has the biggest ASC footprint out of all of
Mhm.
them. I think USPI is their ASC.
Yep.
Um, it's a little bit tricky because the market is quite hot for ASCs at the moment. Surgery Partners reported this quarter largely unremarkable quarter, but one of the things they said is that M&A has slowed down for them partially because deals are hard to find.
Hmm.
And so there's a lot of competition for deals because ambulatory surgery is sort of very clearly the future from payers like it, government payers really like it. So there's a new rule coming out that's changing what surgeries can be done in inpatient and outpatient settings that's going to favor ASCs in a pretty meaningful way. And so, but I think if you're, and so Ardent, for example, I was listening to their earnings call yesterday, like they would like to have more ASCs. They're opening some, they're building some de novo. But it does seem like the market's a little frothy.
Yeah. It was I think it was Tenet that I was listening to where they were talking about the M&A acquisition strategy and they were talking about how they still think they're the preferred like they're going to be the partner of choice in the space and it was interesting to hear them talk through um they get a doc who started an ASC in cardiology or what have you and that doc kind of builds it up in cardiology and then Tenet can come in and help them expand to multi-specialty and grow into their next phase of investment in the ASC and I was like I get that. I can also see where you get more competition coming into the space. It feels a little like when everybody got excited about primary care clinics 5 years ago, and all of a sudden it became a lot more costly to buy primary care clinics. And while the thesis might not be entirely wrong, everything is about the price you buy in at when you're in the involved
Yeah.
circles, right?
Yeah, so we'll see, but I think that as a general, just sort of like gut check, the ASCs are the future,
Mhm.
and I think we're going to see that more and more. Next up, we have my least favorite topic, which is PBMs. I worked for a company that was owned by two PBMs, and I spent a lot of time on prescription drug benefit stuff, and I just do not understand how prescription drugs are priced.
It is the most confusing, opaque part of the industry to me, and I don't know. If we had Mark Cuban on, I'm sure he'd give us the eloquent spiel of how it should be done. But it's confusing to everybody. Clearly, there's a lot of change in the industry. It seems like from the earnings calls between CVS and Cigna in particular, they're trying to get in front of the change that I guess needs to happen in terms of transparency and how these rebates happen and whatnot. And it seems like that change is afoot, right?
Yes, it does. And so they all have their own kind of name of the program. We got True Costs, Clear Care RX, and Clear Network. Optima RX is Clear Trend Guarantee. But the idea is basically the same, which is that it is like no more rebates. They're passing through transparent pricing for the PBMs. That's it basically as far as I understand it. You flagged something on the Cigna call, which is, they were talking about how it's going to impact how this change is going to impact their business. And you did some math. You want to kind of talk us through that?
Yeah. Yeah. So, I mean, high level Cigna stock tanked on earnings, right? It was interesting because kind of two key parts of the business, Cigna Healthcare, what remains like the employer focused insurance arm, doing well. They talked about how they're excited about strategy there. Specialty pharmacy, they're very excited about strategy that in many ways feels like core of that business moving forward. PBM business, sucking wind from a profitability perspective, and that dragged down the stock, right? And while they tried to position the changes that they're making in this rebate model and whatnot as the future of the industry and going to be a net positive over the long term, the short term math for that division, which had, I think they're expecting like 7.2 billion of profits on the whole in for Evernorth in 2025, which splits roughly 3.6 between the PBM and 3.6 between specialty pharmacy. And the analyst earnings or in the Q&A, they didn't walk through the math specifically, but they said we expect Evernorth to go down slightly in 2026, so call it 7.2 to 7. And they said we expect specialty pharmacy to grow at the top end of expectations, which if you go back to their investor day on growth expectations, it puts that business growing from like 3.6 billion to 4.0 billion. And so if you do the math, that means that the PBM business is losing 600 million bucks in profitability between 2025 and 2026. So going from 3.6 down to 3. So it's a big swing. It highlights the issues, uncertainty in the space. That said, they're still expecting 3.0 billion of profits from it next year, so it's not like it's going unprofitable. And they
PBMs have been money machines for a very long time. I mean, and so I don't know much about PBMs again, conceptually, but I do know that they are very profitable. And yeah, 3 billion is not bad.
yeah, for sure.
The other thing
Um,
you flagged that I thought, oh, sorry, did you have
no,
another?
I was gonna go to the I think where you're
Yeah, yeah,
going.
yeah.
Point
The other
on
thing I
CVS.
flagged, or that you flagged in the CVS write-up, was that retail pharmacies outperforming in a big way, an 8% swing.
Yeah, which I mean, good for them and good for that business and the investments they're making in that business. But it sounded like, as they were describing it, they shared with investors set expectation. They expect that business to decline 5%. It now sounds like it's growing in the 3% range, which is just fascinating to hear and think about. Like, it is a very tangible touch point that we all have with the healthcare system. Like, you go fill a script in Walgreens or CVS and you experience what that is like. And I don't know, to me, it seems like in the same way that PBMs are kind of going down, but still talked about as a key strategic assets in these orgs, like for CVS, it seems to me as a really logical for them to keep that as key strategic asset in terms of that footprint and the touch points they have with this country. And if they can be thoughtful about investing in it in the right way and supporting that, I kudos to them, you know?
Yeah. Yeah, I also think it's sort of interesting to think about what ha else has the arc of the retail pharmacy, because the retail pharmacy, again, there's one, there's two within walking distance of my house, um and people have been saying the retail pharmacy business is dead for a
Yep.
while, but it seems that that death has been exaggerated a little bit.
Hmm.
And yeah, there's something I think kind of there's something to the retail pharmacy that gives it staying power if you
Yep.
manage it uh not as like it's going to be this ever expanding profit thing, and it's like more as a part of the front door to your business.
Yep. For sure.
Um, okay. So the other sort of theme, or getting into the kind of themes we heard about,
Hmm.
consumer-driven healthcare is one of those things that people love to talk about. I was listening to a panel earlier today with folks from Oscar and Aetna talking about consumer-driven healthcare, and I'm always a little bit confused by what that means. Like, is it that the consumer is paying more and so therefore being more judicious with their money? And when I was listening to the Hims and Hers earnings call, I think I got a clear picture of what consumer-driven healthcare is going to look like, not in, white papers and sort of like, but what it's actually going to look like in the market, which is Hims was like, we're getting into the diagnostics business
Hmm.
and longevity, and they see it as top of funnel lead gen for them. That people are going to get tests. Those tests are going to say, hey, you're a little bit vitamin B deficient, and maybe you need some hormone replacement therapy, and you're a little overweight, and XYZ. And we would be happy to fill those prescriptions and send you the vitamins for them. And I think, bracketing, whether that's good or bad for the healthcare system, it strikes me as like a very interesting place to be right now, because a lot of the proposals on what to do with the ACA are talking about uh, putting cash into people's pockets or HSAs and saying, we're going to let people control their healthcare spending. And that it's kind of hard to argue with that. And if you argue against that, you sound a little paternalistic. But also, I know what I'm like when I get cash somewhere that I should spend, especially if it's an FSA, which is what Senator Cassidy proposed, and like it turns into a pumpkin at the end of the year. Is that
Hmm.
like, oh, I guess we're doing diagnostics.
Yep. Yep. Sounds like a great way to spend more money on healthcare here in this country.
Yeah.
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 No. Yep.
No, no, no.
I I am of two opinions on hymns. One of which is, it's like you hear Mark Cuban in all his disruption conversations being like, why are people paying more for generic Viagra via HIMSS and their branded experience than they are like if they just come to cost plus drugs? Like it is objectively a stupid decision that people are making, spending more money there. And like why does it exist? And is it a pill mill? I don't like and there's that whole like complicated question. But then I'm also like, I actually think people are voting with their feet, going to this service and paying for this branded experience. Like in so many ways, this feels like the future of consumer-directed healthcare in this country. And I go talk to health system leaders who are talking about how we rethink our front door and how people access care and whatnot. And I'm like, well, like, what do you think of HIMSS? Because I actually think this is what consumers are telling you they want. It's like, well, no, no, no. Hims isn't a serious company. Like, this isn't healthcare. That's a pill mill. And it's like, I what are you talking about? Like, maybe you're right, but at the end of the day, consumers are paying for the service and telling you they want it. And like, I go back to the Q2 earnings call where the Hims CEO was asked the question, like, do you ever think about partnering with insurance? And his answer was, no, I'm never going to do it. I have no interest in doing it because most of our customers already have insurance, but their deductibles are so damn high that they're functionally uninsured. So it's cash pay even if you have insurance. And I'm like, that's a pretty convincing argument. Like, I think he's right in that. And I think they are very well positioned to do this. And I think the whole Novo saga
Oh yeah.
where in, whatever that was, Q2-ish, they were having partnership conversation. They did partner, right? And then Novo walked away from that partnership, basically being like, HIMSS is quasi fraudulent with its compounding stuff and whatnot, and had that spat publicly. And then on Q3 earnings, him gives the update that they're back at partnership conversation table. And the fact that HIMSS, like the fact that Novo publicly said that and walked away and is now 3 months later back at the table, it's like, okay, I don't really believe that argument that you made back 3 months ago because it was a very like this company is doing things wrong and now you're back at the table. Like, come on, one. Two, it shows the power of this consumer distribution angle that HIMSS has. And I have these moments of it's like the future of healthcare is kind of right in front of us and it's here and we might not like it and there might be some challenges with what it implies for folks, but people are telling you what they want.
Yeah. Yeah. I again, like bracketing my sort of paternalistic
Yeah, for sure.
instincts here, I'm saying, okay, as a health policy matter, we decided that it would be good for more people to have high deductible plans, so they would be more judicious in how they utilize healthcare.
Hmm.
But there's still demand for healthcare, even if you have a $5,000 deductible. And HIMSS is right there, and they'll take your money. And I don't know.
Yeah.
The Mark Cuban thing is funny to me because the cost plus is, basically the name is like basically a call out to Costco. And you're like, yes, the consumer profile for Costco is very, very different from Lululemon. You can buy similar things at both of those places, but the type of person and the price point, very different. And
Hmm.
so even if you can get something cheaper at Costco, you might be a person who prefers to get your leggings at Lululemon. And
Yeah.
like that's consumer driven, you know, athletic consumption.
Yeah.
And so that's also how consumer-driven healthcare will work. Some people will pay more for a different experience.
Yep. And all this, like, I mean, you can go down the rabbit hole playing out all the implications of that, but all of this longevity conversation in this country and getting preventative and healthcare costs are so high because health plans churn out members too fast. And if only we had longer, it's like, I don't believe that for a second. All of this stuff is going to increase costs from a consumer perspective because people are going to want to pay for it. Like, oh
Yeah.
yeah, I want this preventive screening. Great. I'm gonna go get my Prenuvo scan this year. I'm gonna do my longevity blood draws 4 times a year. It's like, I great, go for that. If you want to do that and that is part of your longevity wellness routine and you're taking care of your health, like I think that's a net good thing for all of us. I do not think it is reducing the cost of healthcare in society anytime soon. It is just creating another consumer to put more revenue into a new category of healthcare organization, which is HIMSS.
Yeah.
So
Yeah.
good for
That you
them.
feel differently about spending your money with HIMSS than you do at a hospital or your primary care doctor. And I sometimes I think it's a little bit of a lazy comparison, but Robinhood, the investing app, it provides a very different user experience than Vanguard.
Hmm.
And
Yeah.
but part of what Robinhood at least communicates to their shareholders as part of their growth story is that they're like, we're going to bring people in with the fun stuff,
Hmm.
with the sports predictions and the crypto and the zero date options. And then as they mature over time, they'll open up an IRA and they'll just buy index funds with us.
Hmm.
And that's sort of Robinhood's theory for the life cycle of their customer. I don't know that, I don't know how firmly they are committed to that because they get paid a lot more when people trade zero day options than they do when they buy an index fund. But
Yeah.
you could tell a very similar story for HIMSS and hers, which is, yeah, we get people in with the diagnostic test, and then we do a telehealth appointment and an annual physical that's cash pay, and it's good enough for most healthy under 30s. And then at some point they, graduate to Medicare Advantage, and we have a HIMSS Silver.
Yeah. The one thing that I don't full like I'm curious to see how far this narrative goes into healthcare. Like I don't know that I see any time in the near future. You get a Prenuvo scan, it sees that you have cancer. HIMSS then connects you with their cancer doc who prescribes you Keytruda, and your cancer journey is managed through HIMSS. It seems like this works for the lifestyle, wellness, things that you feel confident in managing yourself, and you just want access to the meds so you can take it. I I don't know that I see them fully like there's a reason why Vanguard and Robinhood both exist, and there's you can take part of the spectrum. I don't think they're going to take over the whole thing, you know. That to me is
I
the growth
I
stuff.
think that's the right way to think about it. I think that it's a story that Robin Hood tells. I don't know how much I believe it, but at
Mm.
least you can see I think that if we live in a future where everyone's on a catastrophic plan, I talked a
Mhm.
little bit about bear care in Wyoming.
Wyoming public option.
And
Yeah.
they're like, Wyoming's like, you can go get your preventative health care elsewhere. And you like, I think you can imagine, okay, you got this cheap catastrophic care if you get mauled by a bear. You have HIMSS, and then you maybe have a primary care relationship. And like, do you need HIMSS? No. You probably just need the health insurance and the primary care relationship. But,
Yeah.
why
All of
not?
a sudden, people are going to be paying $1,000+ a year for their preventative health stuff. They're going to be paying that much for a direct primary care product, and then they're going to be paying $500, whatever it is, for a crowd-funded health plan. And it's like okay, great. That's fine. Off we go.
The composition, it's going to be the exact same cost as health insurance today, but
Yeah.
you're just going to pay three different vendors for it.
Yeah.
And
And importantly, as we've talked about, you get something for it. Like you
yes,
get to go do your Prenuvo scan and you get your blood drawn and you see the results of that. There is you are making a trade-off in that scenario and you feel like you are getting something in return versus health insurance in this country today, which for a lot of
yeah,
folks feels like I am paying $36,000 in, getting nothing out, like for a social contract that is maybe increasingly in question in this country. You know.
yeah. So I good for hymns.
Good for good
Also on
investment opportunity.
yes, though
Not
this is not investment advice.
correct.
Kevin and I are not registered investment advisors,
Yeah.
and nothing we say should ever be construed as investment advice. Speaking of personalized medicine and personalized healthcare, consumer-driven healthcare, Oscar made kind of an interesting announcement, and I just want to touch on it quickly, which is they announced that they were offer a new plan, basically a new product that they were offering, which is specifically an ACA plan aimed at women who are of menopausal or postmenopausal age. And I thought this was interesting because generally, at a very high level, as an insurer, what you want to do is have as diverse a risk pool as possible. So you generally like don't go out and try to like bring specific risks into your pool.
Mhm.
Um, and I have no reason to assume that menopausal women are like particularly bad risk or anything like that. But it's just like a strange thing. You know that there's going to be a degree of utilization for this population because they are saying I'm part of this population and I would like to use this product. So you know that they're going to be, you know that they're going to use it. And so I just thought this was kind of a fascinating thing, but it's part of the Oscar strategy. What are your kind of thoughts on this?
It very clearly is becoming, I mean, their narrative is around its personalized benefit plan design, right? They've got this one, they've got Hola Oscar for the Hispanic population. Um, Do they have a diabetes one?
Yeah.
Yeah, they've got a diabetes one, right? So like clearly they're moving down this direction as personalized plan designs as the future of ACA products. It plays into their ICHRA narrative, which is, hey, on the ACA, people have more choice to pick and choose the plan design that is best for them. And I would assume as long as they've got actuaries who feel like they can underwrite the product, and I would think that diabetes, menopause, the the risk pool is large enough that an actuary feels comfortable with that, that they can do that. Like I would not expect them to be offering a personalized plan for heart transplant patients anytime soon on the exchanges. Uh, Although great for them if they can price that out and it's not an absurdly high cost. It clearly would be, right?
Yeah.
So that to me is kind of the like when you pressure test it against scenarios like that, it's like how far does this personalized plan design actually go at the end of the day? Um, but it's definitely part of their narrative where it does seem to be picking up steam is in this ICHRA conversation, right? Where we see plans, there was that plan we talked about, the county in West Virginia, that their increases are super high. So they basically got priced out of the small group market. They kicked everybody into an ICHRA plan offering. And part of the narrative to employees in doing that is, hey, we as an employer only have one plan design, a couple of plan designs that we can offer you. Here, go pick what is best for you. And that choice narrative I think is really appealing for a lot of people, right? Like, why does an employer pick three different plan designs that I can choose from when, particularly for a large group, you've got 20,000, 30,000, 100,000 lives? Like, let them go pick what's best for them. And so, um, it's an interesting narrative. I'll be curious to see how they keep talking about these plan designs going forward and what membership looks like. There's been a little bit of effort like this in the Medicare Advantage space. Alignment's talked about it to some degree. Um, I get the appeal of it. I don't know. Like as I think about consumer-driven healthcare in this country and where all that's going, I'm much more bullish on like HIMSS is a growth story around consumerism. I think Oscar is a good growth story around the ACA markets. If you buy the ACA market moving forward, but obviously there's a lot of near-term headwinds related to that. I don't know. That's my take. What about
I think
you?
it's a good take. I think two things that I would kind of add in there is number one, hearing is that they got a question about this. I can't remember if it was on earnings or at the BBS conference.
Yep.
And they basically talked about how the people who self-select into their diabetes plan are actually really good at managing their A1Cs.
Yeah.
And so even though you're like, oh, we're bringing in all of these like this diabetic risk, it's like not the diabetic risk that ends up in the hospital. It's the diabetic, like the people who are really good at managing. And so there's actually this sort of interesting, um, they talked about it as a marketing thing, and I think that that's what it is.
Okay.
Um, but I do think that this is some unintuitive stuff going on there. The
Yeah.
other thing that I'll say is when is HIMSS going to partner with Oscar for a health plan? It just seems like a no-brainer to me.
Given the target audience, well, I mean, Oscar is not big enough on the exchanges that it's got a huge target audience. But you go back to Oscar's earliest days and their cheeky little ads on New York City subways, uh, about reinventing health insurance from a consumer benefits perspective, and you think about the broader narrative around cash pay in this country right now, I agree. To me, it would be a no-brainer. But go back to what him CEO said about having no interest in health insurance. Like, if I'm him CEO, I'm like, I, why do I need to partner with you guys? Like, what does that actually
True.
get me? I like,
True.
hey, your deductible is so high already that people are going to use my product anyways. Like,
Yeah.
I'm winning here.
Yeah.
Maybe HIMSS will start a sharing ministry for all its customers, and it and Oscar can partner on that. I don't know.
That would be a fascinating risk. I would love to get an actuary to get a hold of that.
If
Okay.
HIMSS people are listening to this, please do not start a sharing ministry. That is
Please do not start a sharing industry. I beg of you. Bad bad from a PR perspective too. Um, okay. So the last thing I want to talk about is AI. And when we were talking about AI, when we were getting ready for this call, I think you kind of summed it up, which is that there's a lot of conversations about AI in the earnings calls, but only a couple sort of more tangible ROI implementations that are actually kind of logical and make sense. But
Mhm.
what was your sort of AI take for this quarter?
So in general, I find myself, everybody's got you can come up with a transformative narrative around AI and how we're changing our organization and so on and so forth. It is like that talk track feels fairly common. It feels much less common to actually have tangible initiatives that you can talk to with ROI and whatnot. I thought United actually did a very good job on their earnings call, talking through a couple of tangible initiatives. They've got their Optimum, I think it's which is the real-time claims processing platform that they're rolling out with Alina here in Minneapolis, and that seems like a very tangible thing. They somewhat ironically also talked about how they're deploying a tool for providers to help make them more efficient in their coding billing processes, and talked about, I forget the numbers they cited, but like for outpatient, they had a huge lift in productivity. For inpatient, they had a huge lift in productivity, which I mentioned is ironic because they are helping providers to bill more, which their insurance business has been struggling with throughout the year. And so I think there's some like, for everybody who thinks that the left hand and the right hand are very well coordinated, it's like, well, that is a very good example of how they're maybe not as coordinated as most think. But to me, that is a really good tangible example on the one side. Did you have any other reactions to United side before I go to or the other?
No, no, no. I just thought that my only reflection was your sort of left hand, right hand comment, which is that, and another sort of Kevin reflection, which is that AI benefits are going to accrue to the small and large companies. There's really no larger health care company than United.
For
And
sure.
so, of course, there are benefits occurring to individual segments of United. It is going to be sort of funny if all of the benefits cancel each other out because they are you know, a payer and provider with a rev cycle consulting business on the side. And you're
Yep.
like, okay, well, we need fewer rev cycle consultants and we have software and so those margins are better, but then and we just could end the day right where we started. But yeah, so that was that.
Yeah, like if I'm running a large organization in healthcare, I'm probably beyond healthcare, but I don't think much beyond healthcare. I was talking about this with somebody today. I think you're like, it seems like a no-brainer to take a red ocean type strategy here, which is you just let startups try to build out these use cases, you watch it, you learn from those use cases, and then when you see one that you're like, oh, this is what we should go do, you just go build that really fast. And then you build on the relationships you already have. And you should be able to win doing that. It reminds me a little bit of what I would think Epic should be able to do with ambient scribing capabilities and what they've watched with startups in the market, right? Like it seems really straightforward to me that that is the play to be running as a large organization and how you win.
Yeah. I think that it is an exciting time from a technology perspective, but the names that are going to win they're not new ones.
I agree. I'm dying over here. I'm starting to cough a lot.
Yeah, yeah, yeah. Well, yeah,
I on the other side of the spectrum, there's like it's Omada's earnings call was interesting to me to listen to how they talked a lot more about how they have implemented AI in their product from a consumer side of the world, right? Like they've got a couple new features that help with food tracking and whatnot. And it was interesting to me to hear them talk about it on the earnings call because they're like, yeah, our gross margins increased from mid 60s to high 60s or something like that by 3+%. And they attributed it to AI. But this is where I kind of scratch my head at AI being like that being the driving factor of that. Because I get how it can be good from a consumer facing perspective, but I also don't understand how that drives 3% gross margin improvement because it's not that alone isn't changing cost of goods sold, right? Like to be changing cost of goods sold, you need to be changing labor, your cost infrastructure on the back end. And it doesn't compute to me that, okay, you do a new product feature in your consumer facing app that saves that much on the back end. And to me, it's a good example of I don't know the questions that I watch for in this space as I listen to these earnings calls because I think it'll be interesting to watch over time.
yeah. Yeah, I think that we're sort of past the point where we're questioning whether AI is going to make a big impact in healthcare and more at the point where we're saying, okay, who are those benefits going to accrue to? And I don't think most of them are consumer facing or that interesting. I think it is like your integrity program is going to be really good, your interoperability is going to get improved, but a lot of the stuff that we feel is not going to be like chatbots. That's I was listening to Oscar on a forum today, and they were talking about how there's like gonna be a special avatar that you get if you do certain health things, and it'll change and update, and they're gonna use AI for that. And I was like, yeah, I buy that that might influence someone at the margin, but I really think your back office stuff is going to be the stuff that changes the game.
Right. Like as an insurance business, you have a business model that is 85% of your dollars go out to providers. You have 15% of that to manage between your costs and profitability. And it's nice to talk about these consumer-facing tools, but like think about that in the context of the business model. Where does that come in? Okay, you're going to increase revenue because you're going to attract more members, you're going to manage risk better, but in a world where that's managed, so you can't do that much better, that doesn't have a huge impact. So where do you find impacts from AI? It's in driving SG&A savings, right?
Yeah.
Or medical cost savings. But or if you hold those two constant and you're just making a consistent margin, like then you can grow via revenue. But the near-term stuff, in my mind, it's all SG&A savings, right? That's an overstatement. It isn't just all that, but like I think the conversation we've had about alignments earnings calls over time, right? Like they get the analysts are like, how is your SG&A margin only, or your SG&A costs only 8% of revenue or whatever it is, when Humana is a bigger company and they're at 10% plus and have never gotten down to that low. And it's like that is where the actual advantage is. And the way you do that is by streamlining your claims processing, reducing call center staffing, so on and so forth. Like go do that.
I think a lot about the time when you in the newsletter called out, not called out, but noted that Bright Health had was like manually adjudicating a pretty high number of their claims. And
Yep.
yeah, it's like the sexy consumers like facing stuff that looks fun is like so far away from the actual business of healthcare, which is 3 yards in a cloud of dust, just like pounding out. You got to adjudicate the claims, you got to answer the phone, and you got to make sure that, people aren't in the
Yeah.
ER.
I mean, it's why you look at how Oscar turned around the business and made it through. They brought in Mark Bertolini, who was the CEO of Aetna, who came in and he like had this famous phrase of there's a whole bunch of watermelons on the floor of like we were burning, I think he said on a podcast the other day, they're burning $1 million a day. And it's because they weren't an efficient insurance business. They built up all these great innovative consumer capabilities, but they never actually focused on the core of running an efficient ship. And it's like you spent 7 years building all these cool features and whatnot that are a great narrative to tell to the industry and employees who want to come in and try to change healthcare. But then like when inevitably you need to turn a profit and run a business, you bring in someone like Bertolini and he's like, well, yeah, go fix how you're doing claims processing because that actually matters. Like you need to have in place all the prior auth type review type stuff that everybody doesn't like about insurance because that is how you manage to margin,
Yes.
which is unfortunate. And back to HIMSS. Hey, let's just all go use cash to buy the things that we want to buy because hey, who likes insurance and regulation and what?
Yeah.
And in today's society, that feels like where we're
It
heading.
does feel like where we're headed. Well, what a Q3. We'll be back here again for Q4 in January, and it'll be great. We'll give some updates on the names we talked about. We'll talk about some other ones. But yeah, this was a lot of fun, Kevin. Thanks.
For sure. Likewise. See you Q4.
Bye.